Ladies and gentlemen, welcome back to the channel. If you are someone that did not see what happened with AMC Stock Friday and after hours, if you turn off your phone and you clock out for the weekend, well, I don't blame you any normal time, but this is very much a not normal period of time. The short sellers are fucked, okay? And I'm not allowed to swear in the first 7 seconds, but for dramatic effect, I had to wait like 10, okay? So we don't get demonetized here and then shadow ban this video. Now, what does this mean for AMC stock going ahead? And what do you need to know? We're going to talk about it. But I want to say congrats because it's been hard, it's been rough being long in AMC, and there's still more work to do. You're still down on your positions unless you have been just throwing everything you can into AMC every single day, especially at the $4 levels. It would have taken a lot of money to average down all the way to $4. So if you did that, great, you're looking good. But if you're still in the red, as a lot of people are, well, we could have good news to come. Here in this video, I want to go over everything you need to know about AMC, about what just happened, but also what could happen with AMC stock, because it looks pretty clear. It's dead in the water at this point. Let's go ahead and get into all of this information. If you guys want to come trade with us live in real time, every time I make a trade or anyone else in the trading group, if they choose to post their trades, a lot of them do, well, check it out. Link down below in the description of this video. You can sign up. You could try if it's not something for you. Well, you don't obviously have to stay a part of it. There's no contracts or anything of that nature. So yeah, let's go ahead and get into it. So again, if you're someone that did not see what happened with AMC on Friday, quote, "At this juncture, the court's only task is to approve or reject the proposed settlement," wrote in the ruling obtained by Bloomberg Law. The focus of the settlement is on the claims presented in this case. The court cannot address issues that do not pertain to the fairness of the settlement. Such issues raised by AMC stockholders include theories about synthetic shares, Wall Street corruption, dark pool trading, insider trading, and RICO violations, and a request for a share count. The ruling continued. The court's role is limited to considering settlement-specific issues like the strength of the plaintiff's claims, the consideration the class would receive, and the scope of the release the class would give in exchange for that consideration. To cut to the chase, the settlement cannot be approved as submitted, the ruling added later. Now, I think this is the most important sentence. The court's role is limited to considering specific settlement issues, like the strength of the plaintiff's claims, which obviously we were given a dividend in the form of Apes stock, at least that was the way it was categorized, and it was used against us as AMC created this arbitrage trade. Well, obviously, all the hedge funds and institutions that wanted to make basically guaranteed money off this, they voted yes, with the same voting power from the shares that we were supposed to own and get as a dividend, right? It was obviously a cooked vote from the start, and I think the courts obviously see that. Now, the consideration the class would receive and the scope of the release the class would give in exchange for that consideration. Basically, what would shareholders get in exchange for AMC raising billions and billions of dollars of capital, up to $16 billion? Keep in mind, 110 million spread between millions of stockholders. You're talking an average settlement of like $100, $40, some stupid number like that. To see your stock potentially fall and get diluted hundreds of percents, the settlement did not make sense. And that's a long story short of what the judge is saying here. This settlement would either have to be much bigger, maybe $1 billion, maybe a couple $1 billion, or it's just dead in the water. Now, in the short term, we've seen how slow the Chancery Court is. This thing is dead in the water as of right now. The markets are not looking at this like, hey, AMC is just going to go back to the drawing board and they're going to write up a different settlement. We're going to be back in court on Monday and we're going to get this approved by Friday. No, that's not what's going on here. That's not what people are expecting. That's not what you should expect. Now, is that a possibility? A couple weeks down the line? Sure. But what about now? AMC stock is up 63% in after hours on Friday. You hit a high on Friday of $8.76. You closed Friday regular trading at $4.39. You rallied over 100% at the peak in after hours. Now, why is this such a bad situation for the shorts? Like so much worse than anything you have seen in the past. Well, as I mentioned in the video that was put out last night, which it was late, so, you know, if you didn't see it, I don't blame you. You have never, ever been this squeezable and had this degree of good news come out. Ever. You've never had a short score of 96. Back in January of 2021, you had a short score of 80-something, 84, I believe. In June, you had a short score of the low 70s. You've never looked this prone to a short squeeze. As far as the short score, you've never had 29% short interest. That just hasn't happened. And shorts really loaded up on their short positions within the last 2 weeks or so. But there was like 24% short interest on AMC for a long time. You've never had days to cover on AMC at 10.22. This is up 93% in the last 3 months. You've never had any of this. This squeezable, this high, this potentially, bad for shorts. It's never looked like this. Now, at the same time, you have days to cover being so high, the short interest being so high, all of these other factors, cost to borrow fees. Well, you're also seeing cost to borrow fees, right? As I just mentioned, 1,000%, which they've been like this for days and essentially weeks and months now, just fluctuating between like 400% and 1,000%, just insane numbers, right? Even July 3rd, back here, you were at 500, 600% short interest or cost to borrow fees. Even before then, I mean, going back to June on Interactive Brokers, you were still at 100%, 200% cost to borrow fees. It's never been this bad for the shorts. Now, this ain't even what I'm most bullish on. Not at all. The option activity. I've talked about this in so many videos because I think it's so important to highlight. In the past week, you have seen 287 orders totaling $170.37 million. Positive order value of 1%. Now, typically what a hedge fund would do, let's say you're a hedge fund and you have, I don't know, call it for easy math, you're short 1,000 shares of AMC, right? Short 1,000 shares, having a short position, you have unlimited loss potential. Now, what could you potentially do and what would make sense on a risk to reward kind of basis to do? Well, it would probably make some sense to buy some calls. Maybe buy 10 calls because that would cover your 1,000 shares you're short. Maybe buy those 10 calls at $6 per share or $5, $5 or $6 strikes. So meaning that if you're short on AMC at, call it current levels that we were seeing on Friday, $4, well, if you had 10 calls at the $6 call it, well, your max loss would be about $2,000 because if you're short 1,000 shares and the stock goes up $2 and your calls start to go in the money, well, the difference between 4 and 6 is $2 times that by 1,000 shares. Your max loss would be $2,000. Best case scenario, if you're short, your calls expire, which was a very small amount relative to your 1,000 shares sold short, and you make money in your short position. That's what normal logic is if you're a hedge fund or institution. You should hedge out for any potential risk. Well, look at the put to call ratio. I'll blow it up. I'll make it very easy for you guys to see. On Friday, you hit the record highest level that you have ever seen for the put to call ratio, meaning there's more puts relative to calls on AMC's option chain that you have ever seen in the history of AMC. And I mean, January or June, I mean, there's nothing like it. This means that even back in January, even back in June, when AMC rallied to $72 in June, there was more hedging that hedge funds were doing then. Way more hedging. So the losses weren't even, well, they were still big, right? Because the dollar amount was big that AMC moved. But on a percentage basis, I mean, they were more hedged out then than they are now. This, what you see, had zero respect for any potential upside move in AMC. Hedge funds didn't even think it was a possibility for AMC to go higher. And for context, this $170 million, a lot of it was placed on Friday. A lot of it was even expiring on Friday. Some of these trades placed for Friday, these buyers lost all of their money. Because technically, even if a stock moves in after hours, right? If you had a $6 put or whatever, like you see these trades were placed 1 minute until the close of trading, I mean, they lost $500,000. These trades went to zero because of the move we've seen in after hours. All of these trades lost, I would imagine, 50 to 60% of their value. Like that. So when you're talking $170 million, it's not just the shorts and the short positions that just cost you your ass if you're a hedge fund and institution. Also the option activity. I mean, you just lost, if you're playing options as a whole, hedge funds just lost $80-90 million on this week alone. Not to mention any other expirations. The loss could be in the billions of dollars right now. It is. Matter of fact, the loss that hedge funds probably just seen is about $1 billion. Before, and could be even higher than that, including option activity. Because you currently have $625.98 million worth of short positions. I mean, we could throw this into the calculator, do a little bit of simple math here. I don't think it really matters in the grand scope of things, but let's go ahead and just check it out. So times this by 0.63, the move that we've seen. Well, hedge funds just lost $400 million based off of this move alone in after hours. Not to mention the option activity. Yeah, you're pushing close to $1 billion. And again, that's because there was no hedging of risk from hedge funds. And that's why this could be a massive problem for the hedge funds and institutions. Now, where could AMC stock ultimately go this week? Now, one of the most beautiful things about where AMC is currently at is it's so low and the shorts were so wrong. They were caught with their pants down. This is going to cause a short squeeze, okay? I think the real question is to what degree. And I mean, based off the data we're seeing, you could hit new all-time highs. That's just based solely off of the data here. Now, I want you to consider something. And this is very bullish for anyone that maybe doesn't have any options trades in AMC that wasn't foreshadowing this move as we were expecting this move. Link down below in the description of this video if you guys want to be a part of the trading community. Sign up if you guys would like. Again, try it out. If it's not for you, then don't stay in it. But something beautiful about where we are now and what happened back here in June. So AMC obviously rallied from like $6 back here on May 12th. May 13th, it rallied to $8.72, kind of came down, and then it started again around May 24th. And then you just seen back-to-back solid days. Some days were 15%. Some days were 20%. This day was 35%. And you just worked your way up there. And then you've seen a big day where AMC stock opened the day at $23, hit a low this day of $21, ended up hitting a high of about $45. Now, this is on a kind of diluted basis, so the real high was like 70 some dollars. But most of the big move happened in one day. Even if you didn't trade any of these other days and you actually waited for confirmation of the squeeze, you could have still bought at the relative high and made thousands of percent on options. Like, you could have bought back here on May 27th after AMC rallied 35%, and you still, the low was $11. The stock rallied 400% from there. So I think that's a similar scenario that we are in right now. I think there's a huge potential opportunity with some of the options that we're still seeing. Look at AMC on the grand scope of things, guys. You're down here if we open around $7 per share. Shorts are fucked. They're completely screwed. And you know this because you watch videos such as these. Now, AMC stock just broke above all the levels. All of them. Smashed them all with this move in after hours. The 200-day moving average is at $5.42. Yeah, you're not going back to that. If we somehow open there, that would be absolutely crazy. You're not going back there, okay? You just broke the 50, 100, 200-day moving average, the $6 resistance, $7 resistance, like it was butter, like a hot knife through butter. So you're going higher from here. Now, the next big level, probably going to be about $9 per share. That's where you hit back here December 1st of 2022. Now, after that, you really don't have big levels of resistance. $10 per share is going to be a psychological level of resistance, but these losses just hit like a ton of bricks for these hedge funds and institutions. And these losses that we're talking about, $1 billion, that's straight on equity. That's straight on option value that was instantly dissolved based on this move. That's not even to mention the cost of borrow fees that are 1,000%. Now, one of the most beautiful things about this is obviously they're all dead wrong. There was no hedging. There was no, thought from hedge funds this was even a possibility. But a little bit more than that is at this point, there's no hope that things are going to get better if you're a hedge fund, if you're short in AMC. The trajectory is up. There's no other catalyst. There's nothing. AMC's probably not going to go to court to try to fight this again. And even if they did, it doesn't look favorable. Not at all. So I think this is a train that's really going to be hard pressed to stop, no matter what happens. And not to mention, over this weekend, you're getting likely some more great news with Barbie and Oppenheimer. So, the business fundamentally is improving. Now, the one thing that I could say is that AMC's not going to do this dilution. They're not going to be able to raise capital. Now, I don't think the markets will look at it in this light just based off of how wrong hedge funds were and shorts. But there is a possibility at some point you might get, volatility. You might get a red day because maybe just, people are like, hey, now AMC won't raise billions of dollars. Obviously, that's not the thesis as of right now. I'm saying down the line that could become a thesis. Now, I don't think this is all going to happen in one day. I think it could be days. It could be a week or two. Again, think back to what we seen in June. The rally really started in early mid-May, and you didn't actually go through the biggest days of the short squeeze until the beginning of June. So it took about 2 weeks back then, and I imagine it'll take a little bit, kind of the same amount of time. It could take a little bit less, considering we look so much more squeezable today than we did then. Now, if things really get crazy on Monday, $15 to $20 would be the level in which that I would watch for. Now, if you break above that, the sky's the limit. You could easily hit new all-time highs. There's no reason to not cover on your short position at this point. You're screwed. You lost money. You might as well get out before you lose even more and before you lose your ass. Now, on top of that, something that we've talked about in quite a few videos now is the FOMO out there, right? This market environment is a little bit more accepting of FOMO. Now, you've seen some bits of FOMO in 2022, right? You've seen this rally to some degree, this rally in 2023 that, were kind of people piling into AMC. And these rallies were from $8, to $16, good double to, even triples like what you've seen back here in March of 2022. Well, now you're closer to the rate, hiking cycle being over with. You're seeing the markets are, obviously a lot more frothy than they were during these periods of time. So, look at Carvana. I mean, that stock went from, let's go ahead and pull it up. I mean, the markets definitely have an appetite for risk here. Carvana went from $6. It's trading at $45. It hit a high of $57. This is to some degree similar news as Carvana, but AMC's not restructuring its debt, but it's preventing a lot of dilution to its stock, kind of in the same ballpark. So there's a lot greater potential for some big moves, right? Carvana damn near 10x. I wouldn't throw out the possibility that AMC could 10x. And maybe even more aggressively than that. Again, FOMO. When hedge funds, institutions, just investors are like, hey, short squeeze, people start to pile into it, even if they have no idea what's going on. So I'm bullish nonetheless. Again, if you guys want to come trade with us live in real time, link down below in the description of this video. There is an option in the trading community to pay just once for a whole year. It does save a decent amount of money if that's a route that you plan to choose. Hopefully with this AMC rally, should be able to make it all. It should be a pretty easy decision. But nonetheless, that is going to do it for this video. Hit the link down below as well if you have not signed up for Webull. Get yourself some free money. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.